Hello everybody, how are you today? I'm Lisa Pasalacqua. I'm the relocation coordinator here for the Defense Supply Center, MWR. And we're doing something a little new to add to our program. We're having a New York Life Insurance 101. But first off, I just want to let you know about our wonderful Fitness Day that's happening Thursday, June 20th. We've got a lot of fitness activities, free golf, fitness, and a bunker after party. So if you check out our website for more details, come on down and see if you'd like to join us. Inside your packet is a wonderful handy-dandy MWR little survey, and if you'd be so kind at the end to please hand them to me on your way out. I've been very lucky to have these two great guys come in and do this for us. Jim Rudolph and Wayne Horowitz with New York Life Insurance Company. I just want to thank them for coming, and I'm just going to turn it over and get started. Let's give them a big round of applause.
Good afternoon, DSCC. We're here today to provide a little bit of education, as Lisa said. Wayne and I work together in New York Life up in the Dublin area, and we talk to people on a regular basis. I was thinking this is a dangerous thing to give an Irishman a microphone. I'm liable to sing you, croon you a tune. But at any rate, what we're going to do this afternoon is not going to take more than the allotted time. Wayne, why don't you give me a first slide there? You can read this. This is the basic format that we're running under. You're familiar with that in the past. And give me the second slide. Today we have an agenda. They always said if you're more than 30 miles from home and you have slides, you're an expert. But you're really an expert if you have an agenda, when you can tell people, here's where we're going, and we'll know when we're there, and then we'll tell you what we told you, and we'll get out. So to begin with, we're going to talk about the whys of life insurance. Why do you own this stuff? Okay? We're going to talk about the types of life insurance. There's a lot of confusion about the different kinds of life insurance. There's two more there, Wayne, I believe.
Yeah, trying to go.
Okay. A little technical difficulty. There it comes. All right. There are things to consider when you're talking about life insurance. Agents, companies, that sort of thing. And then finally, the last one, we hope to have enough time left over for some questions and answers. All right? So, Wayne, you want to pick up this one?
Sure. Good afternoon, everyone, and thank you for coming, as Jim said. Just to go over a few things here. The risk of not owning life insurance, okay? Life insurance is very valuable. Did you know that half the households in the U.S. feel that they need more life insurance? Something always to consider. Following the 9/11 attacks, the Victims' Compensation Fund valued future earnings of potential victims at nearly 16 times income. For somebody making, $100,000 a year, that would be $1.6 million in life insurance. 3 in 5 of the new middle-class retirees can expect to outlive their financial assets if they try to maintain their pre-retirement living standards. Okay, the importance of life insurance. Of course, you want to build your financial foundation going forward. You want to protect your financial resources. Why do you need life insurance? To provide cash when a wage earner dies? To help pay off debt? To help pay off the mortgage? To help run the household, very important. If someone passes away, you want to be able to keep your family in that house that they've been living in. And you don't want to have to avoid, you want to avoid selling assets to go and pay for those bills. I'm going to hand it over to Jim now to do some of the benefits.
Okay, let's talk about life insurance benefits. These are usually paid to your beneficiary free of income tax. A lot of people don't know that. So when a policy proceeds are paid out, they come to your beneficiary income tax free. The beneficiary may be your family. It might also be your business partners. A lot of people own businesses where they have 2 or 3 people that depend on the other members of the firm, and it's a complementary kind of thing. So when someone dies, the business can survive. Now, where do I begin? First of all, we would think it's important that you work with an agent. An agent, sometimes they get a bum rap, but there's a lot of really good agents out there who know their craft well. First thing that they do is gather information. In other words, like a doctor. They don't just shoot from the hip. They should gather information about you and what your goals are. They should evaluate your family's needs. Some people say they want to make sure that there's plenty of money for college and that kind of thing. And so it's important to evaluate that. We need to estimate what your family would need if you were gone. So if a person's making $50,000 and they pass away, and there's only enough money for $20,000, we've got a problem. There's a shortfall, isn't there? All right, so we want to be aware of that. Then there are expenses at death, such as final illness and